So has the reopening trade fizzled out before we can even kind of get into the next phase of recovery?
It really has. It's really been a darkening mood towards China's economy in recent weeks. We did see that April data, of course, miss estimates, and that really kick-started sentiment in markets turning bearish. But we're seeing also that in commodity prices, they're tumbling. Copper really taking a hit, and it really kind of underscores how negative investors are towards the reopening story. The evidence or the kind of consumption boom that everyone was expecting, we didn't get that. So there are structural weaknesses in China's economy that I think people hadn't really kind of priced into the reopening trade. But also there's debt concerns. An LGFE, a local government financing vehicle, repaid a debt very last minute. That spooked markets as well. The yuan is weakening. Kind of everywhere you look, there's evidence of increasing bearishness towards China's economy. Let's not forget, though, that the market did rally from October when rumors of the COVID zero policy being scrapped were first kind of circulating in the market. So we're still up from that level, but we've given up about half of those gains, at least when it comes to the CSI 300 and the MSCI China. And foreigners are selling onshore stocks as well.
If you have pressure on the economy, does that mean that the government might step in, and expectations of the government stepping in actually help investor sentiment?
Exactly, and that should be kind of the next step, right? Because when you do have negativity towards the economy, markets sometimes do take that positively because bad news is good news. It means more stimulus. The problem with China is that we're in a confidence trap where confidence is weak, but it's not. The economy is not weak enough for policymakers to step in. And that the MLF. The PBOC's latest rates decision really showed that they are sticking to a cautious approach when it comes to stimulus. The PBOC has held interest rates; it hasn't cut during the reopening experiment, if you will, and that really shows that what is kind of the catalyst for markets, because the economy is not booming. There's actually increasing concerns over debt repayments and the path going forward when it comes to that. And the PBOC is unlikely to ease because it is worried about the macro leverage ratio, which is at a record almost 280%. So really, how will the PBOC and how will policymakers in Beijing deal with economic weakness while maintaining a cautious stimulus stance? That is the key question in markets right now, and investors are choosing to sell rather than hold on to their positions.